Right then, good afternoon, everybody. Welcome to today's session. This is Adrian speaking. Hopefully, the sound's coming through loud and clear. Shall I put the see if I can share the webcam? Let me see if we can do that. See if that works. Didn't work last time, but we'll give it a go. Let me put that on. Good. Fantastic. Right. So, what are we doing today? I'm going to be taking you through about cryptocurrency trading, some of the whys and wherefores about it, and just to hopefully, I guess, enlighten you a little bit about this particular style of trading. Now, I know that some of you may not have traded cryptos before. Some of you may have traded before, but not particularly this type of market. Maybe you've never done anything with cryptos before at all. Could you let me know? Would that be okay? So what we've got is it's a live session today. We like interaction. You can get involved, and the way in which you can do that is by typing into the questions box. Now, if you're on GoToWebinar, it's where I'm going to mostly moderate the chats. That's using a sort of webinar software, although we are streaming on the likes of YouTube, Facebook, and so on. But the best way is to get involved on GoToWebinar. It might look something like this, depending on the type of device you're on. You'll see a question mark somewhere. You might have to maximize this little panel out. Question mark, type into the questions. It'll look something like that depending on the device you're on. If you wouldn't mind now just typing something in, just type hello or hi into the questions box. Maybe just type yes if you've traded or invested in cryptos before. That would be great. So type hi and yes or something like that. It'd be nice to know how new everybody is today. That'd be quite useful. Mark is a hello and a yes. That's excellent. Thank you. As is Jonathan and Robert. Looks like Malcolm is new, and that's absolutely fine. Let us know, please, guys, because what we're going to do is take you through some trading strategy stuff. And we'll take you through some of the fundamentals, I guess, to do with cryptocurrency trading. So, like I said, this is live. Do get involved in the session as we go. The way these sessions tend to work is I'll probably talk for about 20 minutes, half an hour or so. We'll do a bit of theory. We'll learn a little bit about some stuff. We'll learn some strategy, and then we'll apply it to some charts as well. So, little bit of a disclaimer before we do really get into it. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Past performance is not a reliable indicator of future results. There you go. Okay. Let's just quick question on GoToWebinar, guys. Can you see me on the webcam? Is that actually working? I've never actually done it on GoToWebinar before. I hope it's working. I know it works on the streams and things like that we do with YouTube and stuff. So you can let us know. That'd be cool. All right, let's get on with it then, shall we? Enough of the housekeeping. Cryptos. So some people are saying they've done it. Some people haven't done it in terms of trading before. It says it's still loading, does it, Mark? Let's have a quick look at that. I mean, I had a problem with this last time and it didn't particularly work. So let me see if I can just see if I can get this going. Yeah, I don't know. It's not looking particularly clever. Sorry. I'm going to stop that. You don't want to see me. I've got a face for radio. Look, what we'll do, let's get on with it. So the thing about trading cryptocurrencies is, and we will talk about the difference between trading and investing and so on. To my mind, really, there's not much difference between trading a cryptocurrency to trading a stock to trading a regular currency, an index or a commodity. It is simply a market. Now, some of you might be sitting there thinking, oh God, cryptos, the difference, I'm scared of them. They're a bit faster, sure, and that does make them actually in many ways more attractive to be involved in. Are the risks really that much different? Well, probably a little bit because of the speed in which they move. But I think when you're talking about trading as opposed to investing, it's not about wealth creation. It's not about, holding something for 5 years and really analyzing the fundamentals of something. Largely speaking, fundamentally, I don't really care or have much knowledge about a lot of what I trade. It's really just whether the chart looks right and whether it's going to give me the opportunity. Because by and large, I'm in an opportunity for a few days. So the fundamentals are far less relevant on that basis. So if you think about it in that way, from a trader's perspective, we're not really so interested in the fundamentals or really what it is we're trading. It's more about how we should be trading it. So ultimately, a trader is far more interested in how much a market is moving and the opportunity around that. And there is a lot more opportunity with crypto markets in terms of percentage movement. And you can see actually it has become, although there has been quite a pullback in cryptocurrencies prices this year, it has become a bit of a bigger market. There are more brokers now that are offering sort of reasonable dealing charges and there's decent movement there, some of which you can trade with leverage if you have the right type of trading account. So, these things are suddenly become very, very attractive. And I think that if you go into it thinking, oh God, I don't know what cryptocurrencies are, in reality, you know, that's probably not really such a problem as a lot of people might think it is. And I don't think that should necessarily be something that should hold you back. So the thing about it is, and the thing that makes it very attractive is the speed in which the markets move. Now, this data is a little bit older. Now, so the average true ranges can move. So the average true range is basically your typical daily range, if you like, of a candlestick. So how much, what's the difference between the high and low of a day, typically for a currency pair, gold, the Dow, cryptocurrencies like Bitcoin, Ethereum, and so on. So this is where the opportunity really is when it comes to trading cryptocurrencies, because they have historically moved a lot further, a lot faster. So, for example, euro dollar typically is moving way less than 1% move a day. So the typical movement, the size of a daily range is less than 1% move. Very rarely will you get a move over 1%. Whereas Bitcoin, by contrast, is typically moving, okay, a little bit out of date, but it might be a bit different now maybe, but typically moving 6% in a day, 5, 6, 7% in a day for many of these cryptocurrencies. In fact, by and large, on that basis, that means that cryptocurrencies or Bitcoin moves at, broadly speaking, 13 times the speed of euro dollar. 13 times. And that makes it quite attractive. Now, the difference between trading a cryptocurrency or trading a Forex pair, there are subtle differences. The currencies are perhaps a little bit more institutional. The crypto market is a little bit more retail focused. Is there a bias to the upside? Well, there has been in the past. There certainly hasn't been this year. Stocks generally have a bit of a bias to the upside, but it doesn't mean you can't short sell. You just have to understand that they move down in a slightly different way to the way in which they move up. Cryptos is the same. The speed in which they fall is a little bit different to the speed in which they rise. But that actually doesn't really create a problem as long as you recognize that, as long as you understand that. So cryptos can be very, very attractive to trade. And the way I look at it basically is it is just a different name for a market that I'm interested in trading. Because if you think about it, all we're really interested in is what the candlesticks on a chart tell us, whether it's BP, whether it's Bitcoin, whether it's euro dollar, it doesn't really matter. Yes, they'll move in a slightly different way, and your strategy should recognize that if you've got the right types of trading strategies. I certainly do. But I wouldn't get too panicky about, oh, it's cryptos, really. Stop loss in, make sure you manage your trade size a little bit and so on, and you should be absolutely fine. One of the things that you have to be quite careful of with cryptos is that they are fast and they have bigger trends, bigger crashes accordingly as well. You can see some of the biggest crashes that they've had over the last 10, 12 years. So in June 2011, they fell 99% on Bitcoin. 56%, 83%, 50%, 84%. You don't get the moves of this magnitude really on anything else. Not particularly clever for a long only trader. Okay, it does make it attractive for short sellers though. So having the ability to short sell, having the ability to trade it and take on some of these smaller moves can be extremely attractive for traders. We're going to talk about that a little bit later on, because basically the way this kind of works is when it comes to trading is rather more about the journey and about how you do something. You can look at the price here. Let me just change my pen color. This is the monthly chart for Bitcoin going back to, I don't know, what is this? 2017, mid 2017. So it's trading at, I don't know, what's that, 5,000 or so. The market rallies nicely, really aggressively up to 20,000, and then it goes all the way back down to about 5,000 again. That's about a 70% fall, something like that. That is a significant fall. And then it has another massive rise, and it's rising probably over 150% again. And then it has another significant fall. That moves about a 50, 60, 70% move again. Whether it's 50, 60, or 70%, it doesn't really matter. It's just massive. Okay. And the thing about it is you can look from this point to that point and think, well, I'd be pretty happy with that. You've got a market there that's kind of quadrupled in value over 3 or 4 years. That's great. The emotional journey in between here, though, is such that it's very difficult actually for anyone to stay in a trade for as long as this. And in fact, by and large, what happens is, and some of you may have experienced this, when it comes to volatility, even if you were in the trade back here, and a lot of people weren't, of course, you probably didn't exit there. Most people were buying up here anyway. I remember the Google search volumes for Bitcoin back in November and December 2017 were just insane. In fact, Bitcoin was very much moving in line with its search volumes on Google. It was quite very weirdly correlated, actually. And then it just completely fell off a cliff. And if you didn't get out there, you probably were holding on for dear life here until eventually you saw the price break there and thought, oh my God, it's going to go down to zero. Because there's nothing really holding Bitcoin up other than people thinking it's going to go higher. It's got no earnings. It's got no balance sheet per se. And then the market got completely clobbered again, and you probably would have got out there. So actually, a lot of investors would have seen this market go all the way up and then come all the way back down and probably lost money. And then probably missed this next move higher where there would have been a lot of decent action and thinking, oh God, actually, no, look, it's about to start going good again. Let's buy it now. It's starting to rise, only to see as soon as they buy it, the market starts to spin off again, falling 50%. Think, oh God, actually, no, it's not very good after all. And then probably miss this whole move here. The psychology of most investors and traders is that will typically be, if you're just trying to ride out the moves, or get back in when it's performing again, most of us will be on the wrong side of the trade. You don't get into it. You typically end up buying on the highs, only to see again the market come all the way back down again. So the journey in which a market gets there from an investor is actually very different to the way in which an investor actually holds it and runs it. Very few would still be in this position over this period of time. Most people would have got out and made a lot less than actually you might think doing this. The good thing about, does that make sense, by the way? The good thing about this is, though, that these moves do create opportunity, particularly if you can take the longs and the short side. It can make it extremely attractive. So let's just have a little bit of a look really at that. Where are we? Bear with me. Hang on. What's happening to my mouse? There we go. So, and you can actually see that from individual coins as well. You can see that, there's a lot of cryptos there. Bitcoin, Ethereum, BNB, Ripple, Binance dollars, BNB, and so on, Cardano. There's quite a lot that's on there. And what you're seeing now is the current price versus the all-time highs. And look, that's a little bit out of date. It's lower than that now, isn't it? The falls that have been experienced have been quite dramatic. And I think what this really should demonstrate to everybody is that if you want to get into cryptos, buy and hold is an extremely difficult way in which to be successful, because the pullbacks you have to experience are and can be extremely painful. Some like 90% this year. So buying and holding should be a very, very difficult thing. The thing with it is, though, within that there are opportunities, there is potential for us to take the smaller moves, which can add up to significantly higher than the overall moves themselves. Okay, this is kind of what I'm looking at. From an investor's perspective, this looks great doing all of this, but by and large, we won't have actually already achieved any of this. Most people would have probably bailed out of their investment here, then probably bought it up here, and then actually in a loss-making trade there as well. Okay. So my question is, what would we prefer to do? Trading is rather more about taking these smaller moves. The idea that actually take your profits, having them move down, move up, move down, move up, move down, move up, move down. The potential overall, if you add up all of those lines, is significantly higher than the potential from just buying and holding. And remember, you can only really buy and hold once. What you get out of that is, well, if you close it, fine, that's it, you're done. My question to you is, and if you look at that chart there, what would you actually prefer? Would you prefer a strategy that could help you with number one, or would you prefer a trading strategy like number two, where you can pick up opportunity over the smaller moves? Type 1 or 2 in the questions box, please. That'd be really helpful. And the thing with that is, the other thing that people really don't think about for trading is that after each winning trade that you have, if your account's a little bit bigger, now you can draw that profit down and you can take that profit. Or what you can do is you can actually choose to increase your trade size a little bit, so that if your account is a little bit bigger, trade 1 is whatever size, trade 2 is going to be a bit bigger, trade 3, if that's another win, is going to be a bit bigger, trade 4 can be a little bit bigger, and so on. So the risk you're putting in, so 2% of a 10 grand account, 2% of an 11 grand account is bigger, 2% of a 12 grand account is even bigger. So the ability to grow that account by compounding makes it extremely attractive as well. So we'd all prefer number 2, wouldn't we? So the question is, what's holding us back? A lot of you are not trading cryptos. What's preventing you from trading them already? Is it fear of the market, or is it not having a strategy that you think could work? Or is it something else? Could you let me know, please, in that questions box? What would be holding you back from trading and trying to take advantage of these markets? Is it fear of cryptos themselves, or fear of having a strategy that's that would be able to achieve, as I said, or something else? Strategy wise, and what we're going to look at today is really the way in which we can really look to outperform. So Victoria's saying sort of fear of the crypto market, no clear fundamentals on cryptos, says Stephen. Not having a strategy, yeah, says Francis. It's actually 3 different answers there. You can do it with the DAX. Okay, so Tony, are you saying therefore that you don't really see the point of trading something like cryptos because you can do what you do on other markets? Is that what you're saying? So therefore it's not, you don't really need to do it. Which is interesting, of course, but the way I'd look at it is it's just an additional market. So if certain markets are better to trade, I'd say there's a certain thing with volatility. If you think about the best markets to trade, they're usually the ones that move fastest or furthest. And the reason for that, and I remember listening to a podcast a year or 2 ago, and someone articulated it really well, probably better than I will now, is that if you think about what typically happens in a day, there is a certain amount of sort of buying and selling that needs to get done in a day. And that creates this sort of almost random oscillation of prices that's going to happen in a day. So for example, you might say that on a Forex pair, that currency pair is going to be, just because there's some travel money people need to do. Someone's got to build a business. Someone's got to do this, that, and the other. There are decisions being made that require people to buy or sell currencies, or to buy and sell cryptos, to buy and sell stocks. And that creates a certain random amount of movement that happens every single day. Our ability to extract profit is to be able to trade markets that move consistently, I think, beyond that random amount of movement. So if you say that, currency pairs probably move a range of 30 or 40 pips in a day just because they exist and people have got to get certain stuff done. Any movement beyond that is kind of like trend following. It's where there's a big oomph, there's real speculation going. So the more the market moves, the clearer those trends become, and therefore the easier the market actually is to trade. So there is an argument to trading markets that tend to move a lot faster, because the faster the market moves, the more the market moves, the more you're not interrupted by the chop of that market. So when the market's like randomly moving around, you can often get stopped out with your stop loss and just get low ticked or whatever because it's like, bloody hell, you know. Whereas if the market is more decisive, the further the market actually moves, actually the more you can do with it because it has more purpose behind the moves. That means you've got more scope to move your stop up a little bit without getting knocked out by that, that random sort of oscillation, if you like. And that gives you a little bit more freedom. If you're looking at a market that's only going to move a few pips, you're thinking, oh, you've got to be bang on accurate with your entry point every single time. Trading a market that's faster gives you a little bit more room for error as well. You don't have to be quite so bang on your entry because you're looking at bigger moves relative to the costs that you're paying. So it actually becomes easier to trade and easier to be profitable with a market that's a little bit faster, in my opinion. You mentioned the DAX there, I think it was Tony. Tony is DAX is a good market because it is generally quite fast anyway. The DAX and the Dow indices generally are quite good. That's why they're quite good for day trading, but also cryptocurrencies because the amount at which they move actually means you can do more with that opportunity because there's just more there's more overshooting, shall we say, and the more a market can overshoot, the more potential for profit and to capture that profit there really is. Okay, does that make sense, everybody? It may not make sense, but in terms of strategy, what we're going to go through is really the way in which we approach the markets anyway. So at Trendsignal, we have day trading courses and we have swing trading courses. Now, the way in which we swing trade is similar-ish, similar sort of type style of trading across Forex for Trendsignal Plus. We've got a stocks program called Momentum Stocks. We've got a crypto program called the Complete Crypto Trader. A lot of it is about turning points. A lot of it is about trends. They do move differently. These markets do move in a different way. For example, in stocks, they move downwards in a very different way to the way in which they move higher. So a market will, for a stock, for example, will be grinding higher and then poof, and then it'll grind higher and then boff. By the time you end up with the market going down, it's quite hard. You need to manage that move. Currency pairs tend to be the way the move down and up is broadly the same. And crypto is a little bit more like this actually because the fear is higher. So they tend to be more boost of speed, and then the market will slow down a little bit, and they have a boost of speed and the market will slow down a bit. So they do react differently. What patterns work best with cryptos can be a little bit different, and usually are a little bit different to Forex and a little bit differently to stocks. So hence, the strategies that we apply to the markets are a little bit different between those programs, hence having 3 different programs basically for swing trading, depending on the type of markets we want to trade. Anyway, I digress. What we've got here, the blue line is the crypto trader performance, just trading off the daily chart. And you can see that even with Bitcoin going down, the yellow line here, or orange line here, this is Bitcoin performance over that period. Sometimes these markets can take a real tailspin, the ability to short sell, the ability to capture the profits that are available on these markets can allow us to pick up profits even though these markets might be falling. Now, from a broker perspective, some of you might be saying, well, how can you short sell? All you really need to know at this point is that you can. It can be done. There are brokers out there that can allow you to short sell the markets on cryptos. So these opportunities are very much available, and we'll happily talk to you about that if you wanted to be one of our members. Now, let's have a quick think about the strategy. So the Complete Crypto Trader strategy. I'm going to show you right now how we identify trading opportunities, some of the filters we look at for identifying trades. We'll talk about how we can simplify the process a little bit, and I'm going to show you some different time frames as well, so there's a little bit for everybody. Could you give us a quick let me know in the questions box, everybody, how often can you look at the markets? How often do you want to be looking at the markets? Would it be like a once a day thing? Would it be a few times a day? Would it be several hours a day? Would it be, hey, I can trade all day, and more importantly, I want to trade all day? So it's a little bit how much time do you have, and how much time are you inclined to put into trading? Can you let me know, please, in that questions box? Is it once a week, by the way? Is it like, yeah, I don't really want to look every day. That's, I've got other things I need to be doing. Let me know. So Victoria's just come out and said there, once a day, which is great. Malcolm's saying a few times a day, probably retired, probably self-employed, something like that. Let's have a look at some charts and let's have a look about how we can look to sort of capture that. So let me just bring up the crypto system and we can have a look at Bitcoin there. Okay, we'll look at some different time frames a little bit later on. What we're going to start off with is a look at Bitcoin. So a bit of a mixed bag. So that's really helpful. This is the daily chart. This is Bitcoin. Here's a list of some of the different markets that are rather more tradable, shall we say. So dealing costs are good and so on, a bit more liquid and so on. We've got over 100 cryptos that we can trade on here, but some are rather more for sort of long only, off your dailies or weeklies. And then these ones here are a little bit more for more active stuff where you typically have the ability to short sell a little bit better as well. So this is Bitcoin. This is the daily chart. And we've got this little widget down here. So this is the daily chart supported by the weekly and the monthly time frames. So we look at higher time frames to determine longer term bias of the market. This is on our medium speed setting. So we can speed this up if you want to sort of turbocharge a little bit. You can slow it down as well. But these are the bells and whistles on our system that I probably won't go through too much today. And you can apply a trailing stop to the charts as well. I don't tend to personally, but that's my own style of trading, as it were. What we've got here is a period of the last couple of months for Bitcoin. What a lot of people think, and I kind of want to demyth something really, that what a lot of people seem to think about cryptos is that you're going to be in something and then it's going to probably rocket 100% or something like that. That doesn't happen very often at all. It does happen. Don't get me wrong, but you've got to probably be more a bit lucky than anything else. A typical trade on a cryptocurrency is in the order of between sort of 5 to 20%. Okay, so most trades, if I look at our particular trading strategy with cryptos, the average move, I look at the long only trades over the last like 3.5 years, the average move is 19%. Okay, so for every buying opportunity, the average move is 19%. The median, which is kind of like your halfway point, what typically a market will move, is about 8%. So that gives you some idea of what a typical move for a trading opportunity might be. It is not 100%. Yes, they happen from time to time, but like I said, that's probably more by luck than judgment, really, or anything like that. What we should be doing as traders is looking to manage our day by day, our week by week, our month by month. And that does not happen by trying to hold out for that one lottery ticket type of trade. It may sound great to tell your mates about it and so on, but that doesn't really make us rich. It doesn't help us to extract profits from the market on a consistent basis. In order to do that, we need to have a deeper understanding of the market and how the market is most likely to move. The only way you do that is by analyzing data which we have analyzed. And one of the things that we know is that markets typically move in certain ways, and it's about our ability to capture that movement. So that what we do here at Trendsignal is we provide traders with strategies that have typically produced very high success rate trading opportunities. Okay, we can't guarantee winning trades. Nobody can and nobody should do. But what we do is we identify patterns that have historically produced fantastic trading opportunities. On the basis of those patterns should repeat themselves. For example, there is a buying opportunity here. What makes this a buying opportunity? Well, let's keep it to its crudest terms because we only have so much time today, another sort of 20 minutes or so. Is one of these discs on the chart. That identifies for us a buying opportunity with a green outline around it or a red outline around it for a sell trade. What this is telling us is that the circumstances around this move are such that this should and has historically produced trades or turning points that have good moves. Okay, so we should be very interested in trading it, and it ended up being a very, very good move indeed. The reason that it's pink on the inside is because it's a particular type of trade setup. This particular one is a trend reversal strategy. That's what a pink one is identifying for us. It's telling us that if you just look on the left-hand side, you look at the week, look here. Okay, so you look at this bit here. You look at the weekly and the monthly arrows, they're pointing down. This is a downtrending market. So Bitcoin is on balance falling, but what's happening is this market's doing this, and that's starting to do this. So the trend is starting to move back up again. Okay, so you're starting to see, well, you've got a high there and you've got a low. Ooh, that's a higher low. So in order for the market to start to do this, it's got to start to put in the right types of chart patterns and candlestick patterns. The market is oversold. So you're in an oversold situation. The market is starting to put in an uptrending chart pattern, despite the fact that the longer term trends are down. So it's like the early stages of a trend reversal. That's what the pink snipers are doing. That is a pattern that is commonly produced or consistently produced great trading opportunities in the past, and B, it is a pattern that is repeating itself right now. So that's what the system does, is it looks for the best performing patterns, the most consistently profitable performing patterns to repeat themselves very clearly, very visually, puts those on the chart. And we've got another one here. Okay, so you can see that one's got a grey inside, and that was a buying opportunity there. A really nice move, and that's in line with the trends and so on. It's trying to build in line with the longer term directions of this market. So it's in line with the weekly trend. The chart patterns are still positive, and this blue line here, you don't need to worry about all this too much, but effectively it's telling us that the daily chart is trending higher as well. So you're building a picture. The system, what our system does, is it looks at what's happening around any turning point and looks at the background and says, oh, this is happening, that's happening. That's a pretty good pattern. That pattern tends to produce decent trades. Okay, let's put a sniper disc on this chart. That's what the algorithm does, and it identifies that straight away. Okay, so whenever those patterns repeat themselves, you'll see one of those discs. Okay, there's quite a lot going on at the moment because the volatility in Bitcoin is such that actually a lot of those turning points do actually produce decent trades in the way the market's setting up right now. So quick question, yes or no, does this make sense? Are you with me? Give us a yes or no, let me know please in that questions box. Now, the criteria for a sniper is different on a cryptocurrency than it is on a Forex pair and so on. And again, that's down to the way in which the markets move. Okay, but volatility helps with that. Etienne, you're talking about a fear of not having a strategy. This is the strategy, giving you a clear framework of where those opportunities really are. Someone mentioned earlier there's no clear fundamentals on cryptos, and that's what's holding them back from trading. That's true. I'm not sure there are any clear fundamentals with cryptos. The thing that sort of holds this market up is general buyer perception, and that's actually what creates the volatility, is that buyer perception can be quite fickle, really. And so we're like a herd, aren't we, with retail traders? There's a much bigger proportion of cryptocurrency trading is retail traders rather than institutional traders. And that's what creates that sort of more greater herd mentality and greater speed of movement alongside the lower liquidity. So, but again, that's to our advantage as traders, basically. Okay, so what we can do is we can look at things like the daily chart. Now we have tools like TradeMate that can help us with stops and targets, and we have a scanner tool as well that can find us the latest trades as well. So a couple of days ago, what was it, Sunday night, we could have run the scan and we could have found that opportunity to buy on Bitcoin. What do we do from there? Well, 23.16, 23.160 to there. That's a move of about 4.5%, nearly 5%. That's a pretty decent move in a day, and it goes back to the ATR. 4.5%, 5% move on a stock doesn't generally happen, but it can happen with real frequency when it comes to trading cryptocurrencies. So, instead of making, 1 or 2% on a move or 0.5% a move in terms of percentage movement in terms of currencies, here you're looking at 5 to 10 times that size, which is obviously attractive. Now we can apply this to other markets. We can scan for new opportunities, but if I want to look at, I don't know, Cardano, for example, you can see some great trades there. Okay, so you can see a really nice sell trade, and we identify stops and targets for our traders on that basis as well. Really nice moves. That's a loss-making trade. That's okay, and a really nice winner there on Cardano too. Okay, so it's just, again, having that clear guidance of which way these markets are likely to go. Most of us don't have that guidance, but that's what these tools can do. So AVAX, again, you can see some really nice, compelling trading opportunities going from 24 right up to 30. What's that? That's actually about a 20% move. Okay, so it gives you some idea. So from 25 up to 30 there, that's 20%. So this market has moved out in 1, 2, 3 days. So you can actually trade that in quite small size and still get decent opportunity for profit. Because that, in percentage terms, a 20% move, it's probably the equivalent of about a 3% move on a US stock. Probably the equivalent of about a 2% move on a UK stock. So what that means is you could trade this in a way that actually risk a lot less. You could trade in a way that you're only looking to capture, you could probably trade it a fifth of the size of what you might do in a stock and still get the same potential sort of return, which is quite attractive, obviously. There's other markets as well, the likes of Luna. That's been quite interesting lately. You notice the short trades. The ability to make money on falling prices from 185, 1.85 down to 1.6. That's a 10% fall in a couple of days. But what's quite interesting in Luna is, wow, look at that. That looks ridiculous. Well, this particular market gave us a sell trade there from $90, and it fell to about $1, just under $1, basically. It had a pretty much a 99% fall in 2 or 3 weeks. Not particularly clever if you're long, of course, but then that's the danger of investing in this stuff blindly. Trendsignal members, and what you could have been, is short that. You can short it and then potentially riding that market all the way down. Either way, there's a lot of opportunity for a winning trade as long as we know what it is to look for. So if you're sitting there thinking, well, cryptos, yes, they're interesting. Yes, they move faster. That makes them interesting. Can I trade them short? Yes, you can. Can I trade them long? Yes, I can. Can I identify trading opportunities clearly? Yes, you can. There's actually really nothing holding back anybody from trading cryptos with this system because it provides you with the guidance there. And actually, I look at the moves that have been taking place over the last few months with this market, and they're still super big. Dollar terms, they don't look as big as they were before, but actually from 191 up to 250, again, that's a 20-odd% move. That still makes it extremely attractive there. And the thing is, we can apply this to other time frames as well, the likes of the weekly charts. You can trade them. So you can look at charts on the weekly time frames if you want to take a bit of a step back. You can trade them on the 4-hour charts if you want to. You can speed or slow down the settings. This is sort of more phase 2 really. But if you only want to look at the markets once a week, you can do that as well. Again, whether it's a crypto or whether it's a currency, I really think I've always felt I don't really care what it is. My interest is about my ability to call the direction right. So if I call the direction right, I can make money. So whether that happens to be a cryptocurrency or a currency or a stock is actually not really that relevant to me. I don't actually care. There are certain advantages to different markets maybe, but there are disadvantages to other markets as well. It's just about an understanding of what we should be looking for. We can even trade on the 4-hour charts too. You probably want to limit that to the more liquid markets, but you can see some really decent moves there, the likes of Bitcoin. That's a trade at 1 a.m. on a Saturday night. I'm not trading at 1 a.m. Saturday night, to be honest with you, or Sunday morning, shall we say. But that's a pretty juicy trade. That's a 4-hour chart. So we could have put that on Monday evening, I think that was, and a really nice move there for a buy trade. And again, that's moving sort of 5 or 6%, 4 or 5% in 24 hours. It's just about whether you want that sort of a framework. So like I said, it's a question of being held back because you don't have the strategy. Then this could be the strategy. And if you're doing it because you're not too sure about cryptos, don't have to worry about that. Put the stop loss in. And if you're always concerned about something, if you need to sleep at night, just reduce the trade size down a little bit. And that's the great thing with a lot of these platforms, particularly with some of the unit sizes, you can trade as small as you like. That's the great thing about it. It does give you a lot more flexibility over that trade sizing there. Okay, so what this is not going to be today, because I'm going to be finishing up fairly soon. This is not about cryptocurrencies being something which are, we need to worry about, the whatever of currency, decentralization of currencies. I'm not interested in any of that. I don't actually pretend to really understand any of it either. As far as I'm concerned, like I said, on your trading platform, it's just a different market that pays slightly differently that I can trade. I'm not interested in voting rights. I'm not interested in dividends. I'm not interested in capital growth over the next 5 years. I'm interested in that for my account. I'm not interested in that for this one particular trading opportunity. Okay. Guys, is this helpful? Give us a quick yes or no in the questions box. It's been helpful getting a bit of an understanding about this. I think a lot of people, there's a real stigma attached, particularly to more seasoned traders about cryptos, thinking, oh God, this is all a bit, don't know enough about it. I think we kind of trying to sort of not panic about it a little bit, really, in many ways. I understand it. It's new. It's different. It's something that people have been trading in their own. It almost feels sort of anti-establishment, doesn't it? The likes of cryptocurrencies, but you don't really have to even consider it in that way. It's just a different type of market. The performance of this strategy over the last few years has been fantastic. We've got data going back to about 2018, largely because many cryptocurrencies haven't been going around for that long. So the longevity of this market, we can only actually analyze our strategies for 3.5 years. But don't forget that we're using methodologies that we've been using since 2003, which is when Trendsignal was established. So looking at every single long trade across our list of markets, that's an 869% profit. That's cumulative profit. That's over 18% per month. So if you add up those 3%, the 5%, the 10% on every single trade, subtract the losers, that's the cumulative profit over that period. Pretty attractive, 58% win rate over that period there, and you can see the cumulative profits year on year. That's just going long, okay? The ability to go short actually provides a pretty significant boost to that performance. It's actually a lot more than that now. I think this data is a touch out of date. It's actually quite a lot higher than that now, and that's because of the way in which cryptos have moved this year, of course. But the ability to short sell gives us a really nice hedge against the way in which these markets are moving. It gives us an opportunity to make profit from different types of markets. And the great thing about it, a lot of people think, well, hang on a second, what about when this market goes back off again? And maybe cryptos will have a big boost of movement again in 2-3 years' time, whatever it may be. Actually, if you look at it, the short selling opportunities have been particularly great, and a lot of over that whole time. And a lot of that is down to the fact that these markets often overshoot. Their speed of movement typically means that the markets overshoot not only to the upside but also to the downside. So when the markets give you a short, they tend to have that extra oomph to go that 3 to 5% more that gives you the ability to extract profits. Far more so than stocks. The ability to short sell on stocks in a bull market is a very, very difficult thing to do. Okay, you can do it selectively, but it's very, very hard to do as a rule. But actually, when it's on cryptocurrencies in a bull market, it's actually a little bit easier. And the reason, like I said, is because even on the downside, the panic sets in, the retail volume, if you like, overextends the moves, overshoots the moves, and still allows a lot of profit potential. Do we go for smaller targets on short trades than we do long trades? Yeah, of course we do. But that's a very sensible thing to do. But it does give us more opportunities to profit, and it doesn't mean we're so wedded to this market going up in order to make a profit. That's the great thing about this. So Some really nice percentage profits. February was down, but it's fine. It'll happen. That's part of trading, right? Okay. One of the things that I think quite interesting, this actually goes back to some of the data I showed you before. The average move, is around that sort of 19% on the buy trades. And that's extended by some trades that are sort of 100% winners, 150% winners, which actually, it does happen when the markets are really motoring, which they're not at the moment. The markets are moving more towards the sort of medium. We're getting more trades around that sort of typical 8% move. And one of the things I always find quite interesting is, if you looked at every trade, every buy trade over the last few years, and if you took it on just a 5% target, no faffing around looking at support and resistance or anything like that. The reward to risk, slightly inverse. You're risking on average slightly more than your target, but that's your cumulative profit. Okay, so overall, a really nice, really healthy result. Trading with an 8% target, and you think, well, that's a bit sort of arbitrary, but whatever, the data's been analyzed, it works quite nicely. So typically your reward is bigger, 30% bigger than your average loss on a trade. That's a cumulative profit of 1,284%, which is also pretty attractive, obviously. The other thing that we can do is something called an active stop. This can be attractive, particularly in very strong trending markets. It wouldn't be great at the moment because, by and large, you'll be chopped out of a few trades and you'd have been better off taking your target. But when this market's really motoring, the ability to stay in that trade, like that Luna, and just hold on to it until those indicators turn the other way. Let me explain what I mean by that. Exit strategies, for example. So an active stop is effectively when the market goes up, and then you exit when the indicator turns back red again. So it allows you to exit that trade. If you've got a market that's really motoring and you're not using a target, sometimes you want to sort of open up the throttle a little bit, and that can really pick up some significant profit potential there. Lower success rates, but greater potential over time. Okay, so really, really fascinating opportunities. We can teach you all of that. A lot of this is actually down to who you are as an individual. Myself personally, I don't like to stay in trades for too long. I like to be in and out. I like to move my capital to the next opportunity, because if I'm stuck, my capital's stuck in a trade that's not going anywhere, I feel like I'm not utilizing my capital to the fullest. And I always feel the markets moves in bursts of sort of speed of 3 to 4 days, and then they start to slow down a little bit, largely speaking. So I trade on that basis. I get in, I get out, go for a bite-sized target, 5 to 8% on cryptos, whatever it may be on other markets, get out, and then I wait for my next opportunity. And then I allocate my resources to that opportunity instead of being stuck in trades for a little bit longer. Horses for courses, I guess. Here's an example of a weekly chart trade. Ridiculous, 1,000% move on Doge. Ridiculous. But there you go. It just gives you an idea about what sort of things might be available as a crypto trader. Guys, I'm going to call it pretty much an end to the session now. But what I would say to you is, if this is something that could be of interest to you, if you think, I'd actually quite like to trade some cryptos with this stuff, and you'd like to learn a little bit more about the strategy, why don't you get in touch? Or pop your details into the questions box. So just type call, type your phone number, the best time that we can have a chat. We can talk to you a little bit more about the crypto system, how the one-to-one coaching and all the workshops work, and how we can help you to trade cryptos with a great deal more confidence. The potential, the opportunity is absolutely there. We'd love to help you and share these strategies with you so you can trade them in the same way. But make an indication. Let me know if you want to set up a call. Just type call, type your phone number, type in the best time that we can have a chat, and we can just pick up the phone and go through it all with you and explain a little bit more about the strategy, go through a few more things with you there. But like I said, just let me know if that's something you're interested in, and we'll take it from there. Otherwise, everybody, that's pretty much it for me. That's a real quick whistle-stop tour about how we trade cryptos here at Trendsignal. Say, if you're interested, get in touch, pop your details in, and we'll help you to trade with confidence there. But otherwise, everybody, have a fantastic week trading, won't you? And we'll see you next time. Bye for now.